Did you know that the Federal Reserve is going to meet again this week? And do you know what that might mean for you? Well, we'll talk about that now. I'm Professor Capko, and I'm going to explain what the Fed's meeting will be all about on June 14th of this week. But first, I want to say that I believe something great is going to happen for you today. And now, back to the video. If you like videos about economics, accounting, business, and law, go ahead and give this video a thumbs up, and I'll know to make more videos like this for you. Thank you. This week, and this is an article from Forbes magazine or Forbes website, and it is from June 9th, and it's discussing the U.S. Federal Reserve and their upcoming meeting this week on June 14th. During that meeting, the Fed's going to decide whether they're going to raise the interest rates or pause the rising of the interest rates. There is really no chance. There's always a chance of something, but there's really no chance of them lowering the interest rates. And it says this is the first time that the Fed chooses to hold the rate steady in 18 months if they do. So it says there's that there's a 1 in 4 chance that the Fed decides to increase rates once again. Now, what the Fed is trying to do is they're trying to ward off inflation. They try to keep inflation at only 2%. And put down in the comments if you think inflation is only at 2% right now. And we'll see what you think about it. So if inflation continues above 2%, the Fed would be expected to raise interest rates some more to try and slow down the economy even more. This could put us into a recession if we're not already in one. And so they've got a balance between putting the country into a recession or making a recession that we may already be in worse, or trying to control inflation. So let me see what it says here. It says the new CPI reporting coming in on the first day of the Fed meeting. So that's a consumer price index, and that report will tell us what inflation was for May. So last month, it's going to look back to last month and what the inflation was, and that may have an impact on what the Fed does. It says if the core inflation remains too high, the Fed has a bias towards increasing rates further if needed, but at least for the June meeting, it may adopt a more patient position of monitoring the lagging effects of past rate moves. So what they're hinting at there is they may just pause and not raise the rates, but not lower them. So that could be what they're going to do. Assuming rates are held steady, which would be a pause, the key question is whether the Fed sees the current situation as a pause with a potential for further hikes or perhaps the top of the rate cycle. Currently, messaging from the Fed leaders has been more hawkish. This implies that in frustration with progress on inflation, that further rate hikes are possible, even likely. So what does this mean for you? Well, if rates keep going higher, that's going to make it more difficult to borrow money, and it's going to put more stress on the banks, particularly the regional banks. And I've done a prior video about interest rates in the banks, and I have a whole series about the banking crisis. So you may want to take a look at that. But also, if there is increased rates, that would either put us in a recession or make a recession worse. The thing that they're not even mentioning here that I think is important is that they've got to consider that at the end of the summer, student loan payments are going to go back into effect. So there's been a 3-year pause from student loan payments. Those are going to start up again at the end of the summer, and therefore that's going to be even less money that people have in their pockets or to spend on discretionary items. Those payments will be going back to the government, and this will cause, I believe, even a more the economy to slow even more. People aren't going to have the money for the big car payments or big house payments with the high interest rates if they're making very large student loan payments. Of course, this month the Supreme Court's going to be deciding about President Biden's recent attempt to forgive a part of student loans between $10,000 and $20,000. We should be getting a decision within the next few weeks on that, whether or not that's legal. But regardless, there is going to be an end to the pause because that was part of the debt ceiling limit deal that was signed by President Biden. So there will be no more pause in the payments. And once those payments go back in effect, I believe that will have a negative impact upon the economy. So what do you think? Put it down in the comments. Do you think the Fed is going to raise rates, or do you think they're going to pause? And how does it impact you and your family? I'm interested in hearing from you, and I'd love to make more videos about this if you're interested. If you are interested, go ahead and subscribe to my channel and hit that notification bell so you never miss a video. Thank you.